Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Visa.
If you find our talks useful, please consider subscribe, like, and comment underneath because, well, it really helps the channel out.
It really does. And before we jump into the main analysis today, I want to quickly mention something for those of you looking at the technical side of the markets.
Right, because charting can get pretty messy if you don't have the right workflow.
Exactly. So if you want a much clearer way to read your trading charts, you should definitely check out VIP Algos.
And just a heads up, the link for that is right below in the description.
Yep, it's down there. So VIP Algos is basically a TradingView indicator suite. It gives you these visual buy and sell alerts right on the chart.
Which is super helpful for spotting trend direction, right?
Yeah, exactly. It highlights trend direction, support and resistance zones, and it even helps with your take profit and stop loss planning areas.
And that works across pretty much everything. Stocks, crypto, Forex.
Everything, yeah. But, we always have to be clear, this is an educational tool only. It is not financial advice. It does not place trades for you, and it certainly doesn't guarantee profits.
Right. Trading always involves risk. You have to manage your risk carefully and do your own research. And full transparency, that is an affiliate link in the description. So we might earn a commission if you use it at no extra cost to you.
Absolutely. So getting into our main story today, why are we actually looking at this giant right now?
Well, the headline making the rounds is that they just reported their highest revenue growth rate since 2022.
Which is a huge beat. But, if you look past just the immediate earnings, there's this massive structural transition happening right now.
Right, because they're basically moving away from being just a traditional payment toll booth.
Exactly. The old model was just, taking a tiny cut when you swipe your plastic at the grocery store. But now, they are actively evolving into a hyperscale hub for AI and crypto.
All right, let's move into the wealth building context.
Sure. So if you're building a long-term portfolio, you really have to view this as a premier compounder.
I mean, historically, people just saw it as a defensive play, right?
Right. A safe dividend play that just naturally benefits from global inflation. But that thesis has totally shifted. This is a growth thesis now.
A growth thesis centered on next-generation payment rails.
Yes. It's for investors who are looking for margin expansion and future catalysts, not just a safe place to park cash.
Okay, but I got to jump in here and play devil's advocate for a second.
Go for it.
We see this narrative all the time. Isn't this just a case of an old legacy giant slapping, AI and crypto on their earnings deck to juice their valuation?
That's a fair question.
I mean, who is this actually for? Is it just a trendy coat of paint on a traditional swiping business?
If it were just a coat of paint, it would be a total value trap. But the difference here is the physical infrastructure.
What do you mean by physical infrastructure?
I mean, they aren't just putting out press releases. They are physically building the underlying pipes to settle stablecoins and process complex AI transactions.
So they're building the roads that the new tech has to drive on.
Exactly. That gives us the bigger picture. Now let's look at the fundamentals.
Because the numbers have to actually back up that story.
And they really do. Look at the Q2 fiscal year 2026 numbers. Net revenue hit $11.23 billion.
Wow. And that's, what, a 17% year-over-year growth?
Yep, massive 17% growth. And non-GAAP EPS surged even faster, up 20% to $3.31.
Hold on. Whenever earnings per share outpaces revenue growth by that much, that usually means margins are expanding rapidly.
You nailed it. And that margin expansion comes down entirely to their value-added services segment, or VAS.
The VAS segment, that's becoming a huge part of the pie, right?
Huge. It's now 30% of their total revenue. It hit $3.3 billion for the quarter, which is up 27% year over year.
Just to make sure we're completely clear here, when we say value-added services, we aren't talking about swipe fees.
No, not at all.
We're talking about the high-margin software layer. Things like advanced fraud prevention, cybersecurity, deep data analytics that they sell back to the banks.
Exactly. Because it's essentially software, almost every new sale drops straight to the bottom line.
Right. And then you also have the Commercial and Money Movement Solutions segment, the CMS.
Yeah, that grew 24% year over year, largely driven by 3.7 billion direct transactions. That's a 23% jump right there.
So let's talk about the balance sheet and cash flow, because, man, this is where the sheer scale gets staggering.
The capital allocation is wild.
It really is. During Q2 alone, they executed a record $7.9 billion in share buybacks.
$7.9 billion in one quarter.
At an average price of $320.66. Plus, they paid out a $1.3 billion dividend.
And they aren't stopping there.
No, the board just authorized a brand new $20 billion multi-year repurchase program.
Which brings their total authorization to $33 billion.
You just don't authorize $33 billion in buybacks unless your moat is practically impenetrable.
And the size of that moat is unbelievable. 5 billion credentials in circulation, over 175 million seller locations globally.
And 14,500 financial institution clients.
Exactly. The barrier to entry for a new competitor is just insurmountable.
Okay, I hear you on the legacy moat. 5 billion plastic cards is great. But let me push back again. Are the actual next-gen metrics really scaling?
They absolutely are.
Because if it's just inflation driving up swap volumes, the growth thesis falls apart.
Well, look at the tokenization data. They have 17.5 billion tokenized credentials globally right now.
Okay, explain tokenization really quick for the listeners.
Sure. So when you buy something online, instead of sending your actual card number, which is a huge security risk, the network swaps it for a unique digital token.
Ah, so it makes it much harder to steal.
Right. And over 50% of all e-commerce volume on their network is now completely tokenized.
What about the crypto side, though?
That's scaling, too. They have a $7 billion annualized stablecoin settlement run rate right now.
Wait, $7 billion already?
Yeah, and that's up 50% just quarter over quarter, spread across 160 different card programs.
That gives us the business picture. Now let's move to the catalyst timeline.
Okay, so looking ahead, the first big event is Q3 fiscal year 2026 earnings, which are expected in July 2026.
And the market is basically going to be hyper-focused on whether they can sustain that double-digit growth in the software services, right?
Exactly. But zooming out just a bit, we have massive macro catalysts hitting in Q3 and Q4.
You're talking about the FIFA World Cup and the Olympics?
Yep, the global sporting events.
See, I look at that and I think, isn't that just a temporary sugar rush?
Seems like it would be, yeah.
I mean, you get a spike in travel for a month, but does that actually change the fundamental trajectory of the stock?
It actually does, because these events permanently onboard new users.
How so?
Well, first, you get massive cross-border volume, which carries way higher profit margins. But more importantly, it forces new card issuance.
Oh, because millions of people are traveling and realize they need a new digital payment method to get around.
Exactly. And the data shows they keep using those credentials long after they go home.
Okay, but what about the AI side? What's the catalyst there?
That's the structural tailwind of agentic commerce.
Agentic commerce. That's when the AI essentially acts on your behalf, right?
Right. Imagine an AI agent that monitors your fridge, realizes you're out of milk, negotiates the best price, and just buys it for you.
Which sounds crazy, but it's happening.
It is. But that AI needs a secure, universally trusted protocol to actually move the money. It can't just log into your raw bank account.
So they are positioning themselves to be that exact trust layer.
Catalysts tell us what could change the story. Now let's pivot to the chart.
Yeah, let's talk technicals.
The technical posture is strongly bullish right now. The stock jumped 3% post-earnings, and it's up 5% year-to-date in 2026.
And I think there's a really important technical framing here regarding those buybacks we talked about.
Oh, the liquidity vacuum concept.
Exactly. When a company buys back $7.9 billion of its own stock in a single quarter, it creates a massive liquidity vacuum.
Explain how that affects the price structure.
So every day there's natural selling pressure. Funds rebalancing, retail traders taking profits, just normal supply hitting the market.
Right.
But when you have a single, highly motivated buyer, the company itself stepping in and hoovering up billions of dollars in shares, it essentially puts a structural floor under the price.
It just absorbs all that natural selling pressure.
Completely. It makes the upward momentum incredibly sticky. The supply of shares is shrinking while demand stays steady.
Which forces the path of least resistance to the upside.
Exactly. And for traders trying to actually map out these structural floors, having a clean chart workflow is vital. You really need a way to visualize where that momentum is stepping in, which, again, is where a tool like VIP Algos comes in handy.
Definitely. So the chart gives us price structure, but what does market sentiment look like?
From what I'm seeing, the market perception is distinctly bullish.
Yeah, the analyst notes have been glowing.
Piper Sandler just initiated coverage on June 30, 2026, with an overweight rating and a $394 price target.
And their whole thesis was based on that digital payment volume strength we just covered.
Exactly. Plus, that $20 billion buyback authorization is the ultimate sign of institutional accumulation.
Boards don't authorize that kind of cash if they think the stock is overvalued.
Right, and news sentiment is getting a huge boost from real-world AI use cases, like that new partnership they just announced with eDreams O2Go.
That's a perfect example of the agentic commerce we were talking about. It's AI-initiated autonomous transactions for global travel.
And they also just rolled out a new threat intelligence platform for fraud prevention, which just deepens that high-margin moat.
It's all feeding into a very positive narrative.
But I do want to bring up some speculative rumors I've been seeing, because we have to be careful.
Oh, the stablecoin rumors.
Yeah. There was this massive rumor that they were joining 140 partners to launch an open USD stablecoin.
I saw that. Retail traders were getting super hyped up about it.
But listen, Samsung and several major Korean firms have officially denied these partnership claims.
Wow, okay.
So please do not get swept up in unverified crypto hype. The actual long-term stablecoin strategy is real, but don't base your trades on Twitter rumors.
That sentiment picture is useful, but we still need to talk about the risks.
And as someone who focuses heavily on risk management, there are some serious downside factors here.
Let's start with the legal side.
Right, the multi-district litigation, the MDL.
Which is basically when the courts combine hundreds of lawsuits into one massive legal battle.
Exactly. Merchants are suing over swipe fees, claiming they're monopolistic. And this isn't just a hypothetical risk. It is costing them real money right now.
How much are we talking?
They recorded a $311 million provision for this in Q2 alone, and over $2.5 billion in fiscal year 2025.
That is a massive hit to the bottom line.
And if regulators step in and cap those fees, that's a permanent structural headwind.
But the real existential threat, the thing that could actually break the thesis, is stablecoin disintermediation.
Yes. The risk that merchants figure out how to completely bypass the traditional toll booth.
Right, because if a merchant in Germany can just instantly settle a payment with a supplier in Japan using a digital dollar on a blockchain.
Why would they ever pay a traditional network fee?
Exactly. It settles in 3 seconds for a fraction of a penny. That makes the legacy swiping infrastructure totally obsolete.
It's the ultimate bear case.
It is. But we have to look at how management is mitigating that risk. They aren't trying to fight stablecoins.
Because you can't really fight the blockchain.
No, you can't. So instead, they are trying to become the settlement layer for them.
Okay, explain how that works in practice.
Well, massive global enterprises still need a trusted intermediary. They need complex international compliance, guaranteed security, and legal frameworks.
So even if they use stablecoins, they still need the trust layer.
Exactly. They are pricing this existential risk directly into their long-term optionality. The toll booth will look different in 10 years, but they are making sure they still own the road.
So with everything on the table, what's the final verdict?
Drumroll, please. The final bullish score comes in at a 9.
A 9. That is incredibly high conviction.
It is. The elevator pitch is that this company is no longer just a toll road for traditional cards. It is rapidly evolving into a hyperscale trust and bridge layer for global digital commerce.
Spanning both AI and stablecoins.
Exactly. So for an investor, this is a multi-year hold compounder. It's perfect for riding out the current macro cycle while capturing the future of digital payments.
Awesome breakdown. And listen, if you want a cleaner way to actually read trading charts to map out these long-term setups, be sure to check out VIP Algos through the link below in the description.
It really is a great TradingView suite.
It is. Visual alerts, trend direction, take profit, and stop-loss planning. It makes things so much clearer. But again, it's an educational tool only.
Not financial advice.
Exactly. And it doesn't guarantee results. Always manage your risk and do your own research. And just a reminder, it is an affiliate link, so we may earn a commission at no extra cost to you.
And if this analysis helped you today, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua.
Just one final thought to mull over before you go. The next time your digital assistant automatically orders your groceries or books a flight for you completely in the background, ask yourself, who is quietly taking a fraction of a penny to ensure that invisible transaction is actually safe? Because whoever builds the foundation of trust in an AI economy ultimately controls the future of commerce itself.